Well, ETF assets are now at an all-time high, but is this really a sign of a shift among retail investors? CNBC's Herb Greenberg working the story. Herb.
Maria, that's a very good question, and the raw numbers would suggest just that. This chart from Barini Associates is really my favorite. Now look, it shows that right around the time of the crash, investors started blasting out of mutual funds. At the same time, as the white line shows, they were plowing into ETFs. Now, stock ETFs currently account for about 13.79% of all stock mutual funds. But does this shift really mean retail investors are shifting to ETFs? Not according to this other chart from Barini. If they went from one to the other, Barini believes they would be shifting to U.S. mutual funds. But instead, as this chart shows, the money is going into foreign ETFs. And within foreign ETFs, Indonesia, well, that was a really big winner last month. All of this is happening as ETFs near $1 trillion in assets. That's a record. And all of this has not been lost on brokerage firms. And in a move that could spark retail investors to replace mutual funds with ETFs, TD Ameritrade is the latest brokerage firm to go commission-free on many ETFs. The caveat, they must be held for 30 days. That means for retail investors that these are really for retail investors, not for investors. That prompted an interesting exchange this morning on Squawk on the Street with TD Ameritrade CEO Fred Tomasek.
The ETF commission-free trading, essentially, we're not making anything. We're just trying to make sure we're bringing things of value to the client. If they want low-cost, long-term investing, this is the right solution for them. We hope to get the rest of their business, and we think there's a natural upsell there.
So it's a loss leader.
I wouldn't call it a loss leader. You're not making anything, but we're not losing anything.
In other words, it's a loss leader. Either way, it doesn't really matter. Look, my take on this is this is just further evidence that ETFs are only now really starting to hit a very serious stride. Back to you guys.
All right, Herb, thanks so much. I think it was Larry Fink earlier this week on the program who said 70% of the action in ETFs is actually coming from institutions.
Yeah, I saw that interview, Maria. It was really a good interview. And that's it. You know, it's an institutional product for the most part. And, you know, it's interesting because people try to think about what were ETFs really created for when they came on the scene with the spider back in 1993. And, you know, with all their attributes, it seemed to be more of an institutional product that has certainly grown up in a very significant way, and that's why we're watching it so closely.
All right, Herb, see you a little later.